Hello and welcome to this special Car Dealer Live, where we'll be discussing the results of our exclusive research into the most profitable car dealers in the UK. Now, we've just published the Car Dealer Top 100 list for 2023, this year sponsored by Heycar and compiled by the accountancy experts at UHY Hacker Young. Now, joining me for this chat about the list is Ian McMahon. He's a partner at UHY Hacker Young. Ian, good morning to you. How are you?
Good morning, James. Very well, very well.
Excellent. Thank you for joining us, Ian. So just before we get cracking and looking at the results of this in detail, a few of the headlines. Now this year, our list shows the top 100 most profitable dealers generated EBITDA profits of a staggering £2.78 billion. That profit is up marginally on the year before, but revenues grew substantially to £73.7 billion combined. Now, last year's list, which looked at figures for 2021's account, showed the top 100 generated combined profits of 2.6 billion and revenues of 62.7 billion. So that's a rise of some 180 million pounds in profits and a huge 11 billion pounds growth in revenue. There's been a number of things driving this growth. We've reported on a huge swathe of car dealer group accounts over this year, and we've seen it pinned on a number of different things. Everything from returning new car supply to retained used car margins, and that continuing strong after-sales performance. But before we get into the details, let's have a little chat to Ian. Ian, what do you think? You've obviously compiled this research for us. What have you seen as the overriding thing driving those profits in the last year?
Yeah, it's been a fascinating exercise to get into. It's seldom you have that opportunity to stand back and really review in such detail. But certainly it's worth bearing in mind the period of the accounts we're looking at. For some of these, it can stretch as far back as a accounting period starting in January 22. So a lot's happened over that time. As you correctly say, the availability of new vehicle product coming back online has been, I'm sure, positive in the majority. Again, during 22, we saw used vehicle residuals as being solid. It was only really quarter 4 22, quarter 1 23 that the market started to soften in certain derivatives.
Well, let's take a look at those top 10. I mean, last year when we ran this exercise, Eddie Hawthorne, CEO of Arnold Clark, described the year as a Carlsberg year for the motor trade, something that wasn't going to be repeated. But here we are a year later with profits for the top 100 going up again. Arnold Clark are at the top of that list yet again with EBITDA of £383.8 million. Sytner Group are in second with £262.8 million profit. Pendragon in third with £170.6 million. And Lookers in fourth with £163.5 million. Well, Pendragon and Lookers, as we know, two businesses that have been taken off the stock market in the last few weeks, actually, with bids from overseas bidders. We've got in fifth place Marshall Motor Holdings with 157.6 million, and a new entry in at number 10, Dick Lovett Companies with 51.2 million pounds EBITDA profit, shooting up the table. So lots to unpack there. I mean, the usual suspects at the top of this list. But my first question to you would be, if you actually look at the operating profit of these two top businesses, 1 and 2. Actually, Sytner would be in first place, wouldn't they, if we looked at operating profit? We don't. We look at EBITDA because it's a fairer way of comparing these businesses. Perhaps we could explain why we use EBITDA as this number for this ranking.
Sure. So earnings before depreciation, amortization and interest. It's usually a good cash generative indicator for a business. Stripping out those accountancy charges for depreciation and amortization, which were necessary evil, but not always like for like.
No, it certainly has been the best judge for these businesses over the last few years. Perhaps we can just talk about Arnold Clark, once again, number one, a huge performance. I mean, it's a juggernaut of a business, isn't it? £383.8 million profit over the year. Let's just talk about why they are so successful.
Yeah, it's to unpack that business in a couple of minutes will be difficult, but as we all know, it's been successful for a number of years. I've got no doubt that level of profitability has really allowed them to reinvest into initiatives, and where they do have a strong market area presence, you can definitely see that drives an ability to invest in emerging technologies. So some of the more customer centric sort of online initiatives, and also the EV education centres. Perhaps it's gained them some real acknowledgement in the sector as well around the average customer.
And am I right in thinking this works out about £1 million profit a day?
Phenomenal, isn't it?
Yeah, I mean, it's an incredible number. I mean, let's look at the second place business, Sytner Group, another fantastic business owned by Penske Automotive, the American firm. 6.8 billion turnover compared to Arnold Clark's 4.9 billion, so considerably more. But their EBITDA number at 262.8 million pounds. What is the difference here we're seeing? I mean, why are they turning over so much more money but not making quite as much profit as Arnold Clark?
You'd be looking, I think, towards the sort of the brands represented by the two groups. I'm sure a lot of people have felt that the list price of some of the premium product really has jumped up, maybe even more than inflation. But within that number for Sytner, they've obviously got some real high-end brands, and perhaps by the time you distill down what selling a prestige vehicle does do for sort of the gross profit retained and the costs of operating, well, it's probably indicating that compared to Arnold Clark, it's not quite as such a sweet spot.
Absolutely. I mean, that top 10 pretty much as we would expect it. I mean, I suppose the only one that really stuck out to me is Virtue Motors dropping down 3 places. Group 1 are in the list for the first time this year. Their accounts were at the right time and managed to get those numbers out to include them in the top 10 this year. So that's obviously pushed them down. What else has sort of affected Virtue's performance this year?
I think we always see Virtue as a business that continues to evolve. They make acquisitions, and although a lot of the acquisitions they make are profit positive from the get-go, I kind of guess that there is that little bit of expansion cost that goes with it. But again, yeah, from considering where Virtue have built themselves to, it's a fantastic result for that team as well.
So let's look a little bit at those independent used car specialists in this list this year. So the highest ranked business is Car Giant, ranked at 26th in the list. It made £25.8 million profit during the year. But we've seen actually a few used car specialists suffer this year, haven't we? And Motorpoint is down 22 places to 36th in the list. The Trade Centre Group down 21 places in 49 for previous best performer when it comes to the used car section. What have we seen there? I mean, there has been an impact, hasn't there, on used car prices and actually used car availability? Are we starting to see that play through into these results in 2022?
Yeah, absolutely, James. You've summarised it very well. Car Giant, if you do delve into their numbers, they have realised a gain on some investment properties in the year. So that number that they've reported, I think it includes about 18 million of investment property revaluation. And it's a business I've never really looked at in detail, but on their balance sheet, they've got a portfolio of 348 million of investment property. So that, I think, has maybe shown that they've gained ground where it's probably more of a good investment strategy. When we do look at the likes of the Trade Centre and Motorpoint, there is that very real concern in the industry that the high volume used car operators really have got themselves onto a bit of a treadmill where, as the availability of stock was restricted, they were purchasing in great volumes and perhaps in some cases paying a little bit above guide to achieve that. where residuals are solid and pretty much, plateaued out. I kind of guess those businesses do have less of a risk in terms of vehicle standing values. But as we all know, that did have to change at some stage, and perhaps as sales have slowed down, that's been the hangover that's seen some of those results soften a little.
We have seen some businesses continue to prosper, though, haven't we? Big Motoring World, Peter Waddell's business up 9 places this year to 37th, with profits of 15.9 million. So there are some people out there in the used car market that are getting it right. But the used car market is tough, isn't it? I mean, 2021 was really a house-on year for prices and margins, and that has softened considerably in 2022. I suppose 2023 is also going to be pretty tough for these businesses.
Certainly coming into 23, perhaps depending on the year end that the client or the business in question is reporting to, I think the impact of the softening residuals will be felt more for some reporting periods than other. But yeah, I'll be fascinated to be discussing that performance in a year's time with you, James.
Yeah. Definitely. While we're on this subject of those ones that haven't done so well, I mean, let's perhaps look at the biggest fallers in the list. The top 10 is rounded out by LSH Auto UK. EBITDA this year of 4.6 million, down in the ranking 43 places. Sandy Cliff Motors, second biggest faller, down 27. Glyn Hopkin down 25, and then Motorpoint, that business we've touched upon, fourth biggest faller, down 22 places. Interesting, some of these names that are on this list. We've also got Perry's on there, Yeomans, Howard Garages, Barrett's of Canterbury, and Parkway Derby. It's a mix of franchised and independent businesses there, isn't it? LSH Auto, I mean, let's just talk a little bit about them. Down 43 places, the biggest faller. I mean, what can we attribute that to? They're Mercedes specialists, right?
Yeah, they have a massive presence with Mercedes-Benz. They've got some, fantastic facilities, which no doubt give them the presence that such a big dealer group would want. But I kind of guess with that, as the market does start to slow, or indeed where they have some challenges with supply, you do have to wonder, will that cost base be met year in, year out in a normal market?
I mean, let's look at the positives. The biggest risers on this list. We've got Inchcape Retail, the biggest riser, up 103 places. They're in at 43rd this year. That's a massive rise for them, and onto the list this year. Dick Lovett, as I mentioned earlier, up to 10th place, a rise of 33 places with EBITDA 51.2 million. You've got Heritage Automotive in 3rd, Rybrook in 4th, SG Petch in 5th. Let's talk a little bit about Inchcape there. I mean, that's a big jump up the list for them, isn't it? A huge jump. Very much worried. One of my colleagues said, how can they jump so far up the list when it's only a top 100? I had to explain to him that we do actually look at more than the top 100 to create this list. Why do you think Inchcape have performed so well?
Well, I think it's in the context of absolute EBITDA. It's a big business. Last year's accounts, they did have an exceptional impairment in the profit result, which I kind of guess bouncing back from that, it stood them that they have been on improvement from what was already in the prior year. But again, it's the size of a business like that. There's so many facets that they can get right. And hopefully it's the start of a bit of a turnaround for them. But you're absolutely right. Some of those dealers just outside the top 100, goodness, don't feel too bad that we won't mention you today, but we certainly do keep an eye on the ones sort of 101 to 120, and it's interesting to see how that mix changes year on year.
And we've seen lots of M&A activity this year, haven't we? Lookers deal we've talked about, Pendragon deal has been rumbling on. We've been covering that over the last few weeks and months. Do you think we're going to see much more of that, especially off the back of some impressive results like this?
Definitely. As you well know, with the team at UHY, I've got work alongside Dave Kendrick and Paul Daly, and it never ceases to amaze us, the conversations that we're having with our clients, as well as the wider networks. Certainly the opportunity for some of the larger guys to reshape their network in line with their manufacturer business plans. There's always something being exchanged, or something just being shuffled to create the perfect market area. But similarly, I also think there's a lot of the guys in the top 100 who will be looking at perhaps expanding to protect their position. Some brands do come in and out of vogue, as we've said before. So acquisitions to get a footprint with a new brand partner, I do think we're going to see a continuation of that well into 24 and 25. And with some of the real monolith businesses we've seen that have been acquired by overseas investors, it does reaffirm the fact that there's the market in the UK to an outside investor is looking to be really buoyant.
Yeah, let's hope so. It certainly gives us lots to write about. Ian, thank you very much for your time today. Thank you to all your team for their hard work on putting together this year's Car Dealer Top 100. It's really appreciated.
Thanks for the opportunity, James. It's been a pleasure.
Good to see you. So that's Ian there from UHY Hacker Young. Now, to read the full list, you can log on to our website. It's cardealermagazine.co.uk and click on the Top 100 tab at the top of the page. I'll see you next time. Thanks for joining us. Goodbye.